Hello, my name is Andrew Biggert, and I'm a partner at Venable, and welcome to the final installment of the Merchant Acquirers Committee, MAC, and Venable Payments Law Virtual Bootcamp. This is our 5th day of covering a legal and regulatory topic of relevance for the payments industry, and today we will be discussing what's next in payments, with a focus on new developments and areas of growth, topics such as faster payments, open banking, push-to-card services, among various other topics. Before we get started, I'd really like to thank MAC for co-hosting this week-long series of webinars. Last year, we had the good fortune to host this event in person, but we're thrilled that we were able to shift everything online and be able to continue it this year and hopefully be back in person again next year. I've been able to sit in on all of the presentations, and we've had great speakers. And so thank you to everyone that has both spoken and then to everybody who has participated by watching as well. Just a reminder to please bear with us if we have any technical issues. Knock on wood, everything will go well, and we should be fine. As we finish out this week of legal and regulatory learning, I think it's appropriate to look at both where we are and to the future, and maybe to start thinking about some of the topics we might be discussing next year if we're able to do this again. The payments industry is constantly evolving, and we're seeing rapid change both in terms of technology, some of the business challenges that companies face, and all of that brings new and different legal and regulatory concerns that need to be addressed. Fortunately, I'm joined today by an all-star panel that includes speakers from basically all parts of the payments ecosystem. We have Kim Ford, Senior Vice President of Government Relations at Fiserv. Kim, could you please say hello and maybe give us a little quick background about Fiserv and your role at the company?
Absolutely. Thanks so much for hosting us today. I'm excited to be part of this panel. Yes, as Andrew said, I'm with Fiserv. Fiserv is a relatively sizable payments company. They really kind of run nuts to bolts in terms of the financial services provided to merchants and financial institutions. So they act as a core processor for several thousand financial institutions. We own two debit networks, Star and Excel. We have a merchant acquiring business that Fiserv got when they acquired First Data last year. And lots of things in between. So, we play a pretty big role, again, in connecting merchants and financial institutions and facilitating electronic commerce. I'm based in Maryland, so if I were in an office, I would be in Washington, D.C., and head government relations, which is part of the legal department at Fiserv. So I interface with, the administration and Congress and 50 state capitals and the EU and so on. Thanks.
Great, thanks. And then we've also got Nan Seiler, Head of Payment Strategy and Operations at Kabbage. Nan, I think a lot of people think of probably small business lending when they think about Kabbage, but you guys do a lot more than that too, right? So can you tell us a little bit about what you do in the payment space and your role?
Sure. So I'm Nan Seiler. I'm Head of Payment Strategy and Operations at Kabbage. And as you mentioned, Kabbage has historically been a small business lender. We are also a registered payment facilitator, and in October of last year, we launched online invoicing and custom pay link to our Kabbage base. A custom pay link is it's a simple way to request payment for super small businesses where they can just send a link to a customer. Think of it as a contextual commerce sort of opportunity where I just had some trees cut down. The guy who cut down my trees could come cut the trees down, text me a picture, I can see they're down, text me a link, I click on that link and make the payment. So without him having to create an invoice, we can enable him to accept a payment using that custom pay link. So in super perfect timing, we took our product outside the Kabbage base February 1st. So we launched to everybody who's got Google and can find us February 1st, which is maybe turned out to be an interesting time frame for somebody to launch a new product. I'm based out of Atlanta, Georgia. So now I am sitting in northeast Georgia on beautiful Lake Hartwell. Super.
And then finally, we have Will Graham, in-house attorney with BBVA Bank, where he provides legal and regulatory counsel on a number of different issues. Will, I know that a lot of the work that you do now is with BBVA's open platform. Could you maybe give us a little bit of background about that and your role with the bank?
Sure. Thanks for having me on, Andrew. It's good to be here. Open Platform is a wholly owned subsidiary of BBVA. It provides banking as a service through APIs that connect into BBVA's banking infrastructure. So think of it as sort of the idea of the bank behind the app. So we provide services to fintechs, services ranging from, through the APIs, ranging from account origination, ID verification, but the shiniest is the payments. Anything from bill pay to ACH to Visa Direct, which is push and pull payments, which I think we're going to talk about later. And then where I come in. So fintechs come to Open with new use cases, and sometimes they're pretty bizarre. And so they are delivering bank services to the end user, to their end user. So they're a service provider for the bank or program manager. So I help Open analyze the use cases that they're bringing that are proposed by the fintechs, and I help them analyze it for legal and compliance risk and come up with sort of a legal and compliance risk mitigation framework for the use cases. And then we work with Open to help their clients implement the services in a way, they're kind of the public facing arm. So we want them to implement in a way that is compliant and protects the bank, and often that winds up protecting the client.
Great. Thank you for that background. I think it's evident that each of your companies is really at the forefront of payments, and that's really what we're looking to do a lot of the discussion about today. That is a lot we have a lot to discuss, so I think we should get started. Just a note for the audience: we do have this PowerPoint, and we will be going through it, but generally our discussion is going to be more of a Q&A kind of roundtable discussion. So the PowerPoint can really just be a resource that you can use really after the presentation. And then of course, you can earn CLE credit for this, and we will be giving the code about halfway through the presentation. So I think, the focus of this panel is what's next in payments, what does some of the future hold? But I think we have to start really with the here and now, because this is a very interesting and challenging time, I think, that we're all facing. So I'd like to start with a little bit just maybe talking with you about the impact that you've seen of COVID on payments, on how your institution is maybe thinking about that, et cetera. So Nan, maybe start with Cabbage, company that does a lot of work, obviously, with small businesses. And could you maybe talk about how you talked about launching a product right before this hit, but how has Cabbage responded to COVID and adjusted to kind of this new world that we're at least living in right now? I think you may, Nan, are you on mute?
Yes, darn it.
Yeah,
I'd love to share what we've been doing. It's really been kind of an exciting time at Cabbage. So the first thing that we did is states started to lock down, and we started to realize that things were going to change. Looking at our small business customer base, we realized that they were about to lose a lot of the revenue that they need. So we wanted to figure out how we could help them immediately. So on March 18th, we actually launched another new product. We launched a gift card or a gift certificate platform. HelpSmallBusiness.com is a site that we launched, and it enables our customers to offer digital gift certificates for their consumers or end customers so that they could try to get some form of revenue stream while we were waiting to figure out what the government was going to do. We knew there was something coming. We wanted to figure out how to help them. So if you think about small businesses, super small restaurants are used to selling gift certificates in person. They didn't have a way to do this online. So our gift certificate program offers the way for any small business to offer a gift certificate. And so we have a lot of customers who use email and Instagram and Facebook and all kinds of social platforms to get the message out that said, hey, you can still support us while we try to figure all this out. Buy a gift certificate and we'll be able to serve you when we open back up. So that was the first thing we did. And that was really quick. We actually built that product and platform in under a week. And
Wow.
we were also looking at the government program. So obviously the Paycheck Protection program rolled out in, I'm going to say, fits and starts, because it's been a very painful program to manage as we consider to receive interim final guidance, which is great. So Cabbage Lending has always been an online lending platform where customers come to us, they connect data points, and they give us access to their data. We underwrite them and offer a line of credit. Well, the Paycheck Protection program requires customers upload tax documents and paycheck or payroll data. So Cabbage rebuilt our entire platform to service Paycheck Protection. And we did that in a couple of weeks. It was a lot of hours the team put in, but we got up and made a number of changes: the ability to upload those documents, the ability to enable OCR to read those documents. So we're super proud of this. Cabbage has actually approved 130,000 loans, which is about $4 billion in small business aid. And this is over 500,000 jobs saved, is what we believe. About 90% of our loans are with brand new customers. So whereas a lot of the big banks said they would help their existing customers, Cabbage has taken on a ton of new customers, which is great. And most of our customers have fewer than 5 employees. So we are helping the micro businesses, which is where our sweet spot typically is. I think by volume, if we look at all of our bank partnerships and Cabbage Direct, we are the 4th largest PPP lender. So we're super excited by that.
Wow, that's awesome. That's a great example of how to react quickly to a challenge like COVID. Kim, and I know that you also had maybe some interesting timing in that I think you recently returned to Fiserv, and so you've got a transition in terms of your work there. But how have you seen Fiserv respond, over the past months to the COVID pandemic?
Yeah, it's interesting. So I'll kind of talk about internal first, and then maybe some thoughts on external. So, obviously, because we are a payment processor, we're essential, right? We're essential business. And we have offices spread across the country. I think we have over 200 actual office locations. So initially, the challenge was just, for one thing, getting people who did not need to be in the office out of the office, right? And making sure they could set up at work from home, set up in a work from home type of situation. But then also making sure that we were protecting our employees who had to go in every single day because they're essential. So of course we had to, hurry up and provision N95 respirators and thermometers to be able to take temperature checks. And, just all of that was a lot of activity for the leadership to focus on very quickly. We ended up giving incentives to our essential employees. They each got essentially like a 25% pay raise to encourage them to stay on. But I'll tell you, from a policy standpoint, what was really challenging was that you had all of these states and these executive orders that were coming out, and they weren't uniform. And so we had worries that in some states, for instance, where it appeared that the governor was kind of deputizing the local authorities to, get involved in making sure that people weren't returning to work, we were afraid that perhaps some of our essential employees would have a hard time getting into work. And then we would have issues with, the processing of transactions. So, I mean, it was a lot. It was a really big undertaking and a lot of questions that we had, kind of throughout the process. And I would say, and I'm not trying to pick on the governors or local government, because I think we're all dealing with this very unprecedented type of thing and, didn't know how to respond. But there were challenges for sure. From kind of a product standpoint, the other thing that we did, because we had so many small businesses, like Nan alluded to, who were in dire straits and concerned about, if they were closing their doors, would it be forever? So we ended up working with our Clover team, that's our point of sale infrastructure, to put all sorts of messages out on the Clover website, and really tried to create this resource center using information from chambers, the U.S. Chamber, local chambers, the Small Business Administration, and FIB, as much information that we could distill for our small business partners as quickly as possible. We were really using that Clover platform to do that. And then like Cabbage as well, we got involved with the PPP program. We chose not to become an approved lender of PPP. We rather are a vendor. So again, partnered with our financial institution customers to make a bit of an easier interface between them and the SBA's E-Trans system to allow them to, submit the applications a lot more efficiently. So it was a full team effort, across the company, internally and externally, on this COVID response.
Yeah, absolutely. It's funny to hear a lot of the similarities kind of in the challenges that different companies faced. So Will, you're at a large sponsor bank that work with a number of fintechs and payments companies, both from maybe the bank perspective, as well as maybe some of the customers that you work with, that you provide, services to. What has been your reaction to kind of the COVID pandemic?
Sure. So the bank, early on when the PPP loans were coming out, mobilized and developed an application process for that loan within 3 days. I mean, there were literally hundreds of employees working around the clock to get that put together. Now, honestly, it's a relatively simple application process, but still, that was a pretty big thing, and it was great to be a part of that. The bank has also worked really hard to work with its customers to make sure that, workouts are kind of handled appropriately. All the forbearance stuff is going well. And they've just done a lot to provide products to customers that may not normally be able to get those, or may not normally be able to work through the sorts of issues that folks are facing now. They've done a whole lot of stuff for that. And I was less involved with that. I was more involved on the fintech side. So one of our subsidiaries, Aslo, actually put together sort of a PPP loan referral process to kick its customers over to Cabbage. And we worked through that, and that was a very quick process as well. Some of our fintechs they care about their small business customers. A lot of our fintechs work with the small businesses, so they seem to be doing a lot for that. But work has not really slowed. On our side, most of the clients we work with, they already have funding. They need to get to a place where they start to make money, and they've not slowed. And we don't have metrics right now, to my knowledge, as far as being able to see into what or we may have the metrics, but I'm not aware of them, to know what their clients, what their end users, what their deposit balances are, whether we're seeing, drop off in that or what it's really impacting. But I'd be interested to know at the end of the quarter what it looks like.
Great. Nan, you spoke about how Cabbage kind of took steps to quickly set up some new programs for kind of the here and now, I think, very much in response to COVID. What are you guys thinking about in terms of some of the longer term impacts, maybe specifically related to COVID, that may impact the payments industry as we move forward?
Sure. I think we're all seeing huge changes in consumer behavior, right? Consumers are doing a lot of online shopping. I think before the panel started, we talked about the number of trucks that back up to my house on a daily basis. I think we've gotten to a place where consumers are doing a lot more online buying or having things delivered, order ahead, curbside pickup. And I think all of those behaviors that customers have adopted to sort of stay safe are also going to be tools of efficiency in the future. So you're going to continue to see a lot of this behavior, even when we get to what we can someday define as post-pandemic, right? I think that we're going to continue to see new digital payment contactless methods, all of those things. In fact, I did mention that we launched our payments business right before the pandemic, and I have to say I've been overwhelmed by the number of customers who've signed up during this time frame. It's exceeded what we originally anticipated, and I think it's because a lot of customers have said, oh, wow, I'm used to taking payments in person, and the first product we happened to launch was for card-not-present transactions. So having that product at this time was a really good solution. I'd love to say we planned that in advance, but that's not how that got there. But I think continued growth in those contactless payments, continued growth in electronic order ahead, all of the things that take the consumer out of that transaction. And I also have seen a lot of growth in buy now, pay later types of transactions. Okay. So I think that's gonna be an interesting trend to watch.
Thank you for that. I think that all makes a lot of sense. Kim, going back to something that you touched on a little bit in terms of the government, your role dealing with government relations. How do you see, what are some of the issues that you kind of are thinking about from a government relations perspective as you move forward? When you're interacting with legislators or regulators, what are their questions, for example? What are they thinking about too?
Well, I would say the biggest difference from my standpoint of pre-COVID and now in the middle of COVID, I suppose, is the fact that we can't drop into a congressional building on the Hill here in DC, or visit a state capitol and have those face-to-face interactions with the elected official or the staff. That's been really difficult. I mean, just being, for instance, in a congressional building and hanging out in the Dunkin' Donuts or the cafeteria, you see people, you share intel. It's a lot. It's a more robust way of getting information in that kind of informal process and structure than trying to get on somebody's calendar or hope you can catch them on a video call. Or in some cases, some of the members of Congress don't do well on video. I mean, their technological challenges and barriers. So I think just the way that we interact as lobbyists with staff and elected officials is different, and I think will continue to be. So that in itself is a challenge. But I think, from the standpoint of the issues, obviously the focus has really been on, how do we prop up the economy, and then how do we, continue to make sure that there's economic growth. And obviously both political parties want that. But, it's been interesting because, it's like that those issues take precedence, and so trying to get their attention on other types of things just feels like a weird ask to say, well, I know that people in your community are sick and they're scared and their businesses have closed, but let's talk about a different issue. You really can't do that. So I think I think at some point we will transition out of this type of climate and where all the talk is about the stimulus to getting back to some other issues. But I think stimulus payments will continue to be a big one for our industry. And I would say something else that I've seen, and I'm sure you all have as well, is a bit more of an interest in data privacy. Privacy is always an issue, right? I mean, we always talk about it in these types of updates, but I think just the fact that, you're hearing apps potentially developed for COVID and how that might, impact, individuals' privacy. I think that's it's giving a new spin on a longstanding issue. And I'm hopeful that maybe we'll be able to continue talking about the need for, federal privacy legislation. It may cover some of these other COVID things, but I think that's a new twist that obviously we hadn't seen before on the legislative side.
Great. Well, thanks. I think that's been a really good discussion about where we are today. And so let's transition maybe to talking about some of the newer developments and things that we expect in the months or years to come. And I'd like to start with faster payments. And Kim, in particular, given your prior role at the Faster Payments Council, could you maybe just explain to us what, for the audience, what does faster payments mean?
Absolutely. So I got this question probably more than any other question when I was at the Faster Payments Council, and it is a bit nuanced. I would say outside of the United States, faster payments systems have been implemented in a number of countries. And I think that in those countries where faster payments rails have been developed, faster payments tends to mean faster settlement of money, right? So the money is moving into the account faster. I think here in this country, we still think of faster payments as really faster access to the funds. That may not mean that settlement has actually occurred, right? It may mean that your financial institution is willing to take some settlement risk and give you, the consumer, access to the funds before the funds have actually been transferred. But I think, I think in the U.S. we will ultimately get to a place where when we say faster payments, it means actual, movement of money from one account into another faster. But I think for right now, there are lots of interesting solutions. Obviously, the clearinghouse, same-day ACH, FedNow is being built. You've got Visa Direct. You've got different P2P solutions, obviously with Venmo and PayPal. You've got early warning Zelle. And so each of those, to me, has a flavor of faster that satisfy a whole bunch of constituents and businesses. So I think right now, because faster payments is still a newer concept in the U.S., it's good that we're not trying to be restrictive and say faster only means settlement, because I think then it would just be too narrow of a view. But I do think that'll change as for instance, FedNow and the clearinghouse, as those continue to grow. I think that faster payments will ultimately become more synonymous with settlement.
Thank you. That's really good background. And then, as a company, with Cabbage company that's kind of launching different payments products and working to develop them, a lot of it on kind of the processing side and serving your small businesses. What does faster payments mean kind of from your perspective?
So you think about our customer base, it's the small businesses who desperately need to manage their cash flow. They struggle all of the time to make sure they have enough money to make their payments for their payroll or whatever they're trying to make a bill payment. So as I think about faster payments, I think it's becoming table stakes. I think it's becoming something you have to absolutely implement. I think that sitting down and starting to think through strategies that address pricing associated with something like push to card, addressing the capital strategy, how are you going to fund that sort of accelerated funding for your customers? Those are the things that have to happen as you look across the base. When I go shopping, these two, do I think that Target needs to have the money that I've spent right this second? Probably not. But if we can get the money for a small business into their hands today, that may make a huge difference in their world. And we know that small businesses really struggle with cash flow. So I think if you're working with small businesses, push to card and instant funding and eventually other faster payments choices will be what we need to use to get the money to the customers as quickly as we can.
And Will, from your perspective, working at a sponsor bank, which has, both you're a bank, but you also provide this open platform where you help others kind of work with the bank to offer different types of financial services. What's your take on faster payments?
I have to echo what they both said, and that's where things are headed. Whether it's going to be FedNow or something else as far as the settlement piece goes, I don't know, but there are pushes. Just give me the money faster. ACH is too slow. Give me push payments. Our open platform clients, customers are demanding it. They always demand more speed, but those are the sorts of things they really care about. They handle that small business gig economy market a lot of times, and cash flow is crucial there. So faster is better. And because our customers and clients want it, open platforms focused on it. And we've been pushing that way. The bank as a whole, their more sophisticated customers actually have been asking for the open platform services. Just kind of, hey, can we get some of that over here? So the bank and the open platform are collaborating there more than I had expected them to do this early. But I see why. But the bank is moving that way as well. They just move at a more glacial pace. but I think that we do see faster payments as a strategic objective, like Nan was saying.
Yeah, I mean, that makes a lot of sense. And, Kim, we started with you for the background on faster payments. Is there anything you'd like to add, just maybe from the First Data perspective or from any kind of particular products or related issues?
Yeah, I mean, again, I think it's been said. I mean, faster is definitely a way that that's where the payments system is going. Especially as consumers experience faster access to things because of better access to internet and smartphone proliferation, and eventually we're going to get 5G, right? The consumers demand better and faster experiences, and they will continue to do that in payments as well. But I do think it's important to recognize that when I was at the Faster Payments Council and I would speak in particular to some, let's say, community FIs or credit unions, I think there was sometimes a fear that faster payments might, totally supplant, the current systems. And I don't really see that. I think, we celebrate choice in this country, especially in payment choice. And I think that, faster will be another option for various use cases, right? Whether it's emergency payments or disaster payments or eventually point of sale or business to business or merchant settlement, right? I mean, there are a lot of really exciting use cases, but I don't think it means that, we're throwing in the towel on debit or credit or, even cash, frankly, or check. Although COVID, changes the cash equation a little bit, I think. At Fiserv, we are continuing to talk to the merchant community about, their desires for faster payments and certainly settlement. And then on the financial institution side as the core, talking to the financial institution community about, what kinds of solutions they would like to eventually offer their consumers.
Great. Moving on to the next topic, and it's something I think at least one of the speakers already mentioned earlier, is this concept of push payments. And there's, whether it's Visa or MasterCard, a lot of the card brands are really pushing this technology to allow for the push of payments to cards and accounts. Will, could you just maybe spend a few minutes giving us a kind of a high-level overview of what does push payments mean?
Sure. So big picture, very basic understanding. Someone is using push payments to send funds from any source. It could be a deposit account. It could actually be another card at times, through the card network rails to a debit card or credit card account using the recipient's debit card number. It's like a merchant return or a refund to a card, essentially. Visa calls them OCTs, original credit transactions, and they run on VisaNet. And to give you a reason why it's kind of a big deal, is issuing banks that participate in fast funds, they're required to make OCT push funds available to the recipient within 30 minutes. Now, and usually it takes place a lot more quickly than that, like 5 minutes. So that's kind of a high level overview.
That's helpful. What are some of the main kind of use cases that the customers that are kind of working with the bank are exploring and seem to be the most popular, at least initially, or even into the future? Sure.
I think that, well, first of all, I guess one of the things to note is that there's a significant limitation. You can't use these payments to purchase goods or services. So it's not a typical purchase transaction that you would use these things for. So allowable use cases, anything, just normal money transfers, funds disbursements, merchant settlement. We're seeing our PayFacs want to move towards this. The digital wallet transfers, prepaid loads, and credit card bill payments, for example. And we're seeing, like I said, PayFacs want to move towards it. We're also seeing our fintechs want to use it for both cash flow management purposes, but also just as a faster means to get a transaction sort of complete.
Great. And speaking of these different uses, Nan, as you guys are building out your payment services that you offer, how do you guys think about kind of some of these newer technologies like push payments? Is that something that you guys are looking at? Is it going to be important to you guys moving forward?
So on the Cabbage lending side, we've been able to fund our customers using push payments, push to card for quite some time, and it's actually at the top of the roadmap for the payments product. But, again, as I look at my small business customers, they just need that cash as soon as possible. So in order to make sure we can give them the right solution at the right time, we want to enable same-day settlement, and that's going to require push to card as the solution right now.
Got it. And then, Kim, you've got the unique perspective of government relations role that you have. And I'm curious, how do you talk to regulators or legislators, whether at the federal or state level, about new technology and push payments? Because, in my experience, a lot of times, legislators, they don't necessarily even understand what's happening today. How do you educate them on kind of these new things that are coming out and like what the future may hold?
Yeah, it's a great question. And I would say, especially specifically on something like push payments, I really focus not so much on the how push payments work and why it's different than pull, because especially, we're still dealing with like maybe 15 or 30-minute meetings, so just even to try to get into that level of detail, I think you risk losing the forest for the trees. So I think what I actually try to do, and I think some of my payments colleagues do as well, is really focus on the why. So why are we talking about push payments? Why does it have a different impact on, let's say, fraud mitigation, and how that shows that payments are continuing to evolve? That's really what I try to focus on versus the actual technical, trying to give them a technical understanding of how it works.
That makes a lot of sense. Just pause real quick to give the CLE code for the audience today, and that is NEXT 2020. So the CLE code is NEXT 2020. Will, I'd like to come back to you for a minute. Being an in-house attorney, you're working at an institution that is pushing a lot of stuff in new directions in terms of technology and the types of services. How do you manage like the regulatory and legal challenges that can come with that from in-house perspective?
So, good question. As I'm sort of advising the other folks in our department and folks in the bank on how to think through this, for any kind of new payments, technologies, or services, first you have to make sure everybody's on the same page with respect to the flow of funds and the flow of information, because until you know those things, you can't really analyze the legal and regulatory issues involved. You need to make sure you've got good contracts in place. The contracts need to clarify who's responsible and liable for ensuring that, us as the bank, that we meet all of our legal and compliance obligations. The contract needs to specify, what is not our responsibility, what's their responsibility. Like, money transmission licensing, for example, can be a tricky subject. If a service provider is involved, you need to know their level of sophistication, if they're going to be handling any of your compliance requirements, especially. So new fintech companies, they're full of brilliant people who are great at tech, but they may not fully appreciate the sort of regulatory swamp we live in and that they're crawling into. And so as a result, some of them don't try very hard to understand what they're expected to do. So you want to make sure you know who you're dealing with and what sort of effort you're going to get on the back end. And then another thing to think through, make sure your operations team for the new technology or service understands the rules. Otherwise, you'll see a lot of improvised workarounds that are a lot more efficient than the control process you thought was there. And make sure that the sales team also understands the rules too, or else you'll see customers who were promised something that you're not allowed to do.
I think that last one in particular is probably really, really good advice. Nan, maybe just kind of flip the same question to you, since you're kind of at an institution that's at the other end of the spectrum. How do you, when you're launching something new, think about compliance and kind of regulatory managing those risks?
So I think I've either lived a lucky career or unlucky. It's hard to decide because I've been with a lot of smaller companies where I've had to figure out compliance. We haven't had the resources that Will and Kim have had at our disposal. So in a lot of my history, I've had to be the one who's figured out the compliance. But I agree exactly with what Will said. You know, identify, the first thing that we always do is identify the funds flow. How is the money moving? And Cabbage is not a licensed money transmitter. So I spend a lot of time trying to figure out how to make sure the money can move without needing to be a money transmitter. How do I affect the right money movement without us being in the middle of it? So thinking about those things. So starting with that money movement and then identifying, here's the places where I think we need to have the controls. Here's the places where I think we need to build out the reporting and the policies and the procedures around it. And then, you know, leveraging our legal team, leveraging outside counsel. Some you know, sometimes you can call this guy Andrew. He can help. But you know, I think making sure that we identify what the product is and who's responsible for which aspects of compliance is critical.
Super, thanks. That's really helpful. And now let's move to our next topic, which would be, I think we're going to jump to contactless payments here. And you know, contactless payments, I think, is getting a lot of attention right now. As Kim mentioned, there's a lot of concern, I guess, about cash simply from the COVID challenges that we're facing. And contactless is viewed as something maybe that can help there. And it's, you know, contactless cards are a technology that have gained more popularity in Europe than here in the U.S. so far. And, you know, obviously a contactless card is one that you can just kind of swipe at the point of sale, you know, tap at the point of sale and be able to engage in your transaction. So, you know, Will, have you seen any change, I guess, in response to COVID, or maybe this was even happening before COVID? I don't know, from the issuing perspective on contactless cards. Is this something that we're going to see grow in popularity?
I think so. Like you said, it was definitely a technology that was much more prevalent outside the States. And it just did not, it's been around for a little while. It did not catch on and nobody really wanted it. Customers weren't using it. And so we really didn't push for it internally. We have begun to move in that direction. And I want to say some of that started before COVID, but now it's starting in earnest. And part of that, I think, is Visa is going to require some new chips, you know, later this year. And so we thought it would now be a good time. But at the same time, we do believe it's a strategic objective. I know that, you know, when I've been to the grocery store to try to pick something up, you know, people are wiping down the point of sale terminals, and you're kind of nervous to touch it, and you just being able to tap would be good. And so we see that as something that is really catching on in the post-COVID world.
Interesting. Kim, I'd throw the same question to you. What are you seeing in terms of contactless?
This is exactly the same. Yep. I think, you know, it's definitely gotten a refreshed look given the societal circumstances. And I think that there's going to be a lot more, there will be a lot more consumers who want to be able to use that, you know, that payment option. I think, you know, a couple of considerations though. I do wonder if, you know, and this may be kind of more of some kind of demographic thing, but you know, will it drive some people to want to have a contactless card, or will it drive some people to think, okay, you know what, I'd really like to transact in a way where I don't even have to do anything with a card, but I want to do everything more in my phone, right? So maybe some of the slower adopters of mobile might be wanting to take another look at that in this COVID environment where they don't even have to, you know, get their plastic out and have any interaction potentially with it. I do sort of wonder about that. But I think, you know, something that we hear certainly from our merchant customers and of course are keenly interested as an owner of a debit network anyway is, you know, that we want to make sure that contactless does not interfere with merchant routing rights. So as that proliferates, I think, we have a responsibility, within the industry to make sure that it's not, you're not having to trade, for instance, some type of convenience or security for merchant routing and other protections that federal law provides.
And then, Nan, I'm kind of curious, when I think about, all the work that Cabbage does with small businesses, obviously there can be costs to new technology, especially if it requires any changes to point of sale devices or whatever it may be. When you guys are thinking about some of the developments you want to do on the payment side, how does your customer base or your merchant base kind of influence some of that thinking, especially maybe with respect to like contactless, for example?
I've been a proponent of contactless for a very long time, and I think that COVID is actually going to help us sort of turn the corner. To Kim's point, I think we're starting to see more adoption of wallets, all of this technology that's been around for a long time, but we're starting to see more use and more people asking, how can we do payments within wallets? How can we do some of those things? As the states start to lift restrictions and those small businesses are trying to open, they're trying to figure out I've got to deal with my PPE, I've got to deal with social distancing markers, and how do I, set up lines that are 6 feet indicators and all of those things. And, how do I take payments without touching everything? How do we get to a point where customers don't have to touch things? So I feel like it's I feel like it's definitely coming. And I think small businesses recognize now is the time as they start to reopen, they've got to figure out how to accept payments in a much more digital fashion, and contactless fits the bill for sure.
Super. All right, let's switch to talking, I think, just briefly on payment facilitation. And payment facilitators are not necessarily a new technology, but I think that they've grown very rapidly and become very popular, and I think that we can certainly expect that to continue into the future. Kim, from Fiserv's perspective, how do you see kind of the payment facilitator model? Is that something that's going to continue to grow and grow?
I think so. I mean, I really do. I think, and the reason I think that is because look, I mean, from an acquiring standpoint, we know that the acquiring side of the business is super competitive, right? I mean, there are lots of acquiring processors and acquiring FIs and ISOs and PayFacs and all sorts of companies, which is fantastic. But I think what that also means in this highly competitive environment is that, those folks who can provide a really personalized experience to merchants are going to be the ones that win. And I think that's where, payment facilitators can play a really valuable role by developing, partnering or developing their own software, uniquely for certain types of merchants, and then integrating the payments in there and really providing a nuts to bolts experience unique to that specific type of merchant. So I see that trend absolutely continuing.
Mm-hmm. And Will, coming at it from the sponsor bank side, I think one of the views of payment facilitators, there's definitely a lot of different flavors. You have some very, very large payment facilitators, but then you have a lot of software companies, maybe they cater to a particular vertical or type of industry that are looking to add payments to their software platform. And that normally payment facilitation is a way to do that. But how do you guys at a bank, if you're working with a company that maybe doesn't really understand all the regulatory obligations that go along with it because, they were just a software company until recently. How do you work with your customers to help kind of address those kind of challenges?
So we've put together, with the help of someone else here on the call, so our thinking is obviously influenced by Mr. Biggert, but we've put together, it's not really a paint by numbers sort of policy as far as compliance and credit risk, but that's what it's kind of intended to be. And so if we're working with someone smaller, we make sure that they sort of follow that to the letter. Now, if we're working with someone larger, we may be able to work with them, but there are a lot of things to consider as you do that. when you begin to step away from what you know you're comfortable with, and you're working with someone more sophisticated, and even the smaller folks are moving towards a more risk-based model as far as how they're underwriting merchants, doing their due diligence. And as you do that, you need to be very specific on the due diligence requirements that you're going, and underwriting requirements, what they are, when they're required, at what point in the process, how long can you wait after true onboarding to do certain things. That's kind of, I think, how we approach those small ones.
Yeah, I think that makes a lot of sense. All right, well, I think we've got about 10 minutes left, and just maybe touch on a couple of topics really quickly, and then get your concluding thoughts moving forward. Two topics that I think we hear a lot about are things like cannabis and CBD. We also hear a lot about cryptocurrency and digital currencies and payments, things like that. I think in both cases, there's a lot of talk, but not necessarily a lot that's happening, at least on the retail side right now. I'd like to get your input on each of those, just in terms of where do you see things going in the next few years. I don't know, Kim, why don't we start with you, and maybe you can start with kind of the cannabis CBD issue, and then also touch on crypto and how you think about those.
Absolutely. Cannabis is one of those issues, again, just like privacy, that I feel like it comes up at every single payments conference. Year after year, you hear about the concerns about so much cash being used and handled, and the security, and all of just the nightmare and headaches that go along with that. So I think the challenge continues to be that while you have a majority of states at this point who have been favorable towards some legalizing marijuana in some shape or form, the problem continues to be at the federal level. The House passed the HEROES Act, which was kind of like the second round of CARES funding. It hasn't gone anywhere in the Senate, but they did introduce in that legislative package language from the Safe Banking Act, which would essentially give a safe harbor to financial institutions and service providers to provide banking services to cannabis-related businesses. I don't think we know if that will survive a Senate negotiation. I mean, Senator McConnell has not been super warm to the idea, but on the other hand, Senator Gardner out of Colorado is a huge proponent of it. He's in a tough reelection, and so it may be one of those things that Republican leadership decides to give to him to make his reelection potentially a little more favorable. So I think in that case, it's the politics that will determine whether the Safe Banking Act continues to move forward, not so much the policy. But I think it is interesting that it is getting more national attention, and certainly that the House passed that language in the HEROES Act. But again, I think there's going to continue to be plenty of financial institutions that are not ready to take that leap and bank cannabis services without the federal law actually changing.
Yeah, and just quickly on crypto, what kind of things is Fiserv thinking about that in terms of the future?
I think that distributed ledger technology in particular has a lot of, fantastic application. I think, I'm less bullish on, point of sale for crypto or distributed ledger technology. I think, I tend to think that it has more interesting use cases really in some of the kind of back office types of products. But look, there's a lot of interest in potentially how it can play with faster payments. There was a House FinTech Task Force hearing yesterday where, Republicans and Democrats are talking about cryptocurrency. And so I definitely think it's going to be a component of the future. I just think that one of the big hurdles is, two big hurdles continue to be, the volatility of crypto. And then certainly there are still a number of regulators in this country and around the world who get nervous about, crypto and those types of things being used for illicit activity. So I think those are two hurdles that have to be overcome if we're going to see a large saturation of that in this market.
Great. Will, throw it to you, quickly, your views on things like cannabis, and then also I'd love to hear about cryptocurrencies.
Sure. I don't have my thumb on the pulse of either of these at our bank, but from what I understand, with respect to cannabis, I know that when we operate in Colorado, and there's a lot of push from folks there, and so our BSA AML compliance folks, they've done a lot of work to try to make this something that we can get comfortable doing. And I believe that we're pushing there. I'm not sure where we are exactly right now, but I think that we are getting more comfortable with at least the concept. On the fintech side, they want to do it. They want to onboard anybody they can, but at the same time, they believe that's an area of opportunity. And so we're getting pushed there from those folks to be able to onboard it. But where it's going and how quickly it'll get there, I really don't know, because it is a hot button topic.
Yeah. And then, and was that on cryptocurrencies as well?
So on crypto, we're not. So our bank is a international bank. We're seeing more of our international affiliates use and do things with crypto, even from a fintech perspective. We're not seeing that a lot here in the States, largely, I think, because of the regulatory issues that Kim mentioned.
Got it. And then Nan, I guess we can probably end on this with your perspective on the two topics.
So Cabbage is at the mercy of all of our banking partners. We have a number of banking partners, and those banking partners are the ones setting the rules. So as long as folks like Will have said no, then we're stuck. So today we aren't chasing that dream because we just don't have the partners with the banks. But I agree with Will that fintechs are ready as soon as the banks are ready, and that's probably back to what Kim said. When the federal government makes some allowances, then I think we can move forward. And I think we've looked at blockchain, we've looked at distributed ledgers for a number of things. I don't see that as, I'm not interested in cryptocurrency as a payment method for small businesses today, but I think that it's definitely something that's coming for sure.
Got it. All right. Well, we do have 3 minutes left, so why don't we just kind of go around the room and give one or two concluding thoughts. I'll get it started. Not so much from the technology perspective, but one of the topics that we talked about on one of our previous panels this week was simply that in a time of economic challenges, there's a lot of vulnerable consumers out there, a lot of vulnerable small businesses. I think we can certainly expect to see heightened kind of enforcement and regulatory environment. And so I think payments companies just need to be aware of that and ready for it, and keeping an eye on their merchants and working with various different partners to do things as carefully as possible. So that's kind of from the legal regulatory side. That's what I would see moving forward. But I'd love to go. Why don't we start with Kim and then Will and then end with Nan? Just what's your concluding thought in terms of looking to the future, something you'd like to leave the audience with?
Sure. I think, a couple just quick thoughts. I think that, what this COVID pandemic and crisis has shown, at least from a payments perspective, is that, we really do need to continue to work on closing the gap between, the unbanked and underbanked, and how they can get access to services quickly and not be left behind, especially in things like, emergent stimulus payments and emergency payouts. I think that, prepaid cards have really done a great job, in that, but I think there's more work to be done. And then I think, the other thing that maybe is more of cautionary tale in a sense is that I do wonder about how government, especially at the state level where budget constraints are going to be very real and very pressing as we close out the year. I think that, it's tempting for agencies to shift some of their burdens onto the technology industry and payments industry as well. So that can be, continuing the discussions around how we should be policing, not necessarily platforms in the way that social media companies are, but are we policing, the purchase of goods and services the way we ought to be, those sorts of things. Or even in some cases, in some states over the last few years, we've seen an effort to try to shift some of the tax collection burden on payments companies, which doesn't work for a variety of reasons. So I just think that we have to be very mindful of, this increased pressure and demand on the elected officials at the state and federal government, and how that may translate to putting more demands on us to help solve some of those problems.
Sure.
Great. And Will, any concluding thoughts?
Sure. As we do push towards faster payments in the COVID world, one of the things I'm seeing anecdotally, I don't know if this is true across the board, it appears that there's a lot more attempted fraud, at least. As you move towards faster payments, the fraud just gets kind of easier and better if you can make it work. So fraud monitoring is going to be key as we move forward, I think.
And
Super.
I think
and then Nan, last word on concluding thoughts.
I think that I would say we're going to continue to see some consolidation in the payment space and consolidation in lots of spaces as a result of the virus and the sort of the economic challenges we see right now. And like Kim, I see a very real concern around sales tax and staying on top of the legislation associated with that, because I'm terrified that one day I'm going to have to start remitting sales tax for all of my customers.
Great. All right. I think that was fantastic panel, and we're right at time. Thank you to Kim, Will, and Nan for that great back and forth discussion. And thank you to Mac for co-hosting this virtual payments bootcamp. I think it's been a great success, and really want to thank all that support. For those of you that participated, thank you. We will have, I believe, available copies of the recordings, and you all should have received the different presentations that we've done. And finally, we should be following up in about a week or so with a very kind of high-level payments law toolkit for all the people that participated. So keep an eye open for that. And with that, thank you to everybody for participating in this week. Have a good weekend.
Thank you so much.
Thanks.